Hi there, Paul Bechtold here. I am joined by Steve Allison, our Annuity Marketing Specialist in Board Marketing. And today we'd like to talk to you about life insurance that works like an annuity. So, Steve, you want to kick us off?
So, when you talk about life insurance that acts like an annuity, what is that? How can you have one and be similar to another one?
Well, that's a great question, Steve. And that's, I think for a lot of agents out there, and definitely some consumers, is they kind of know that both products are part of a life insurance company's portfolio, but they're kind of like, what's the difference between life insurance versus an annuity, and what's kind of the common ground as well? So I like to think of it this way. I like to think of life insurance as a series of payments that becomes an estate, right? We put premiums into a life insurance policy, somebody passes away one day, an estate is created by doing that. Would you agree that an annuity is kind of the opposite of that? An annuity, a lot of times we start with an estate, a lump sum of money, and it can become a series of payments, or it can be distributed in that kind of way for a client as well.
Yeah, typically that's right. I mean, usually it's a one payment, and then it can typically then be dispersed in multiple payments, where you're just kind of talking about the reverse way. They're putting a lot of payments in, and then usually the death benefit comes back as just one. So it's kind of it's similar, but also kind of just the opposite.
Exactly. So what the product I'm speaking about specifically, the life insurance that works like an annuity, that would be a single premium life insurance policy, okay? So and this is the common denominator for you and I is in the market that we deal in. Sometimes we have people what we call lazy money, right? When money's sitting around, maybe sitting in a bank account, or maybe it's in a CD that's rolling over and coming due, and now with rising interest rates and all, somebody wants a better play on their money. They want to be able to leverage that money better, okay? But the nice option with the single premium life insurance is that they could put in one payment. Now it is a taxable event, then it becomes a modified endowment contract. Okay, so therein lies the similarity to an annuity, in that all the growth is going to be tax deferred, but then upon distribution, we've got to pay tax on a last in, first out basis, which would mean the interest gain first down to the cost basis, and then from there on it can be distributed tax free. Okay, so do you see where I'm talking about the similarity to an annuity?
For sure, and that's why you'd probably want to do something with that CD money, with the interest rates and whatnot, being able to grow it tax deferred, and then just do it all at one time in one place, like the life insurance you're talking about.
Right. Now, the advantages of a single premium life insurance policy out there for you folks, especially you agents that are in the annuity market, okay, you might put this in your toolbox, because your first question to me might be, well, why would I ever choose single premium life insurance over an annuity if they're going to behave similarly? Yep. Well, the first big advantage is that the estate is multiplied. Okay, if I have a $100,000 annuity and somebody passes away, Steve, how much does the beneficiary get?
Yep, it would be just $100,000 there.
Right. Mm-hmm. Now, with a life insurance policy, you're multiplying that estate from day one, right? So the $100,000 might turn into $150,000, $200,000, $300,000, depending on the age and health rating of that client. Okay, so that's the first and most immediate benefit as well. Mm-hmm. Similarly, life insurance, regardless of whether it's a MEC policy or a non-MEC policy, the death benefit always transfers in the estate tax-free. Mm-hmm. So unlike an annuity, how would that work with an annuity as far as the estate transfer?
Yeah, so if it's qualified money, then the whole lump sum, the whole account value will be taxable. And they'll have to abide by whatever tax rules there are, whether it's inherited or just passing on to just the spouse. That's all going to be taxable.
And if it's a non-qualified annuity and there's been some interest gain, then how would that be?
It's just the gains, and that's the first thing that gets taxed, is the gains that come out first.
Okay, great. Now, one of the other things I'd like to talk about is the liquidity, the improved liquidity. So with an annuity, let's say it was an accumulation annuity, had $100,000. How much would the client have access to on a year-by-year basis?
Typically, they have a 10-year, 10% free withdrawal for the first, however long the surrender period is.
I got you. versus with a single premium life insurance, it could allow them more liquidity, more flexibility. Similarly, with an annuity, once somebody accumulates and then begins distribution, do they have the opportunity to put that money back in?
Yeah, they do. And is that can be the similar way with the life insurance?
Yes, correct. You have flexibility in terms of, especially if it was taken out as a loan, that could be repaid back and restore that cash value. So for especially those senior clients out there, maybe they're looking for a better parking place for their money, or just anybody in general. Another advantage of single premium life insurance is it's not age restricted. What are maybe some of the age restrictions that you have with the annuity?
But depending on what the goals are, it could be as low as like 74. Typically, once they get to over 80 or 85, there's less and less available products to them.
But what would be the youngest age somebody in most cases could begin contributing to an annuity?
I mean, it can be in the 20s or 30s. You don't see it too often when they're even younger than that, when they're a child or something like that.
Correct. And so therein lies another opportunity with the life insurance is at that 20, 30, even 40-year-old, the death benefit's going to be much, much greater. And you're going to also have a lot more flexibility and options to bear as well. Another thing I would like to point out, Steve, is that I know some of the annuities have enhanced benefit riders, right? So loss of ADLs and those kinds of things. Sure. But the most cash value life insurance policies that are treated as single premiums also come with living benefits, chronic, critical, and terminal illness as well. So we can, then convert the death benefit over for those benefits if needed, but on if and only if needed basis, we're not paying anything extra to get those riders as well.
So like typically though on annuities, they have those enhanced benefit riders on there for long-term care. There typically isn't any underwriting involved. What about this single premium life that you're talking about?
When we're talking about life insurance, there's always underwriting to consider. Okay, so if somebody's healthy and they can qualify, again, the benefit being a lot more death benefit and transfer of estate, okay, there could be a significant advantage. However, the nice part about it is if an agent's out there and they have both arrows in the quiver, they have the single premium life option, they also have the annuity options, then they got something that fits every client and fits their needs. So I'm going to kind of wrap up on the backside of this, Stephen, saying that would you say it's fair to consider, in most cases, annuities are considered retirement planning vehicles?
Yeah, I think that's exactly what people would determine that. Why wouldn't agents use this more often, this single premium?
Well, they could, but think of the single premium as more of an estate planning tool, as well as it could be an enhancement to a retirement plan or even what I would like to call a wealth building plan, because there are no age restrictions on a single premium. Other than I would like to point out that being that it is a MAC, if there are any withdrawals prior to age 59 and a half, there is still a 10% early withdrawal penalty. Okay. So that needs to be taken into account, and that's oftentimes overlooked when it comes to single premium life insurance. So, Steve, I appreciate your insight. What we would like to help you folks out there with is this. There's different tools to reach into the toolbox for at various times, depending on what the need of the client is. Don't hesitate to reach out to us, and don't hesitate to add the single premium life insurance as an option for a client's finances in the right scenario. But with that, we're going to have to call this episode to a close. Be sure to subscribe to Selling Life and Annuities so you get a new episode every Tuesday. Click the notification bell so you're made aware of it, and like, comment, and share with agents and other clients that you know might benefit from that. But at this point, Steve, I really appreciate your participation today. We're going to call this episode to a close. And with that, Steve, what would you like to say to our agents out there?
Happy selling.